Basically, the quote they wanted was $290,000, but the policy was only going to $250,000. Is that correct? Okay. So in this situation, you got that. What happened is the National Flood Insurance Program is only going to the $250,000. What they're offering you is something called excess flood. So excess flood goes on top of that $250,000.
Right, it done that. But
yes.
The private done the whole amount.
Yes, private.
It's like 3 different quotes it gave me.
And we'll talk about that in the last section today about some of the differences. But briefly, yes, coverages are completely different on the private side than they are on the National Flood Insurance Program side. And excess technically is a private policy. But what you're talking about, and I'll talk a little bit about this today because we've experienced this a lot with claims, is you can do a private policy. You could do a National Flood Insurance Program policy with an excess. In our personal experience, though, what we have seen is the claims experience has been better on the private side, because how it works with the National Flood Insurance Program is you got to max out your coverages. When those are maxed out, then your excess policy kicks in. So now you're dealing really with 2 claims, 2 deductibles, and so it can usually be a little more time-consuming. But in many situations, that's the only option you have, because a lot of private companies, unlike the National Flood Insurance Program, they're going to pick and choose what risk they want. Like for, we'll talk a little bit about this afternoon is, 5-year look back on claims. Some companies, if you've ever had a claim on a property, not even you personally, maybe somebody had one 30 years ago, they still won't touch it. So those are things you want to think about on the private side that we'll talk about this afternoon. But yeah, just as I said, you're going to go to $250. If you get the option for excess and it's there, definitely, what we generally do is we send customers a National Flood Insurance Program quote with excess, and we send them a private. And we explain the difference to them. And then we send them just the NFIP that just goes to $250. And then we send them a recommendation on what we recommend, because we want them to understand all the different options. Because excess can be very confusing.
So if they do the excess, they're going to have, if they do the regular flood quote with the excess, that's 2 policies that they're going to have to pay on.
They are. Now, both of them can be paid through the mortgage company.
Okay.
Yeah. But then the concern you have too is maybe the excess decides to non-renew the next year. Maybe it skyrockets. We're seeing that a lot right now, like in Nashville after last year.
So to me, it seems like the private would be better.
It depends on the risk. And so that's why I was telling people, we'll talk a little bit about that this afternoon on the private side, but what we're going to talk about is like flood history in that area of, hey, is this private going to pull out? What is the risk score? And I don't think I've got in this section this afternoon, but I may a little bit on what's called the 20-year flood zone, is what a lot of private companies look like, where they won't insure it. Or, right now, Lloyd's is getting really tight, not just on flood. I think anybody who's dealing in excess right now on any lines will understand that it's rough, isn't it? Our friends in Florida and Louisiana, I don't even know how they're still in business in some situations. And so those things are making things more challenging as well on that excess, because most of that excess is usually through Lloyd's of London or another reinsurer. And so there's a lot of reinsurers are challenging right now on funds and things like that, and it's making excess very difficult. Because I'll tell you, like this week we had to do a $50 million excess policy, and it took us 3 months to do it, because of we had to stack 7 different policies to do it for a building owner. And so it can get very challenging, but you do want to think about that, especially on that replacement cost. Like, let's say that the bank is only requiring $250, or were they requiring $290 in that situation?
Well, they didn't have a mortgage, but
okay.
I had a question about that too.
So in this situation, let's just say they only offer $250, and let's say the loan's for $450. The bank can only require $250, correct?
Right.
Well, what happens to that difference if there's a total loss?
Right, repeat it again.
So let's say you have $250,000 in coverage, and you buy a house for $400K,
Right.
and you have a total loss. What happens to the difference between the $250 and the $400?
See, when I quote a flood, I always put on there replacement cost. So if it goes over the $250, then I do either the excess or the private.
Yes. A lot of people don't.
And I go by what I come up with on the replacement cost. I do a replacement cost estimate.
So
I always put that on there.
Yes. And so a lot of property owners, well, the bank's only requiring $250.
Right.
And what happens in that situation, we've actually seen it happen 3 different times, is they only take out the $250, but they had a loan for $400K. They had to take out a disaster loan for the difference. So they were paying almost $200,000 on a disaster loan on a house that didn't even exist anymore. Right. And so that's kind of the danger of just doing either what's required or the $250 is and thankfully, Something we're seeing in the banking industry is they're actually forcing that a little bit now. Now they're starting to require things above 250, which I'm glad to see. Or let's just say that a property is in a flood zone X, but it's within 20 feet of an AE. We're seeing banks require flood insurance on it now because they're really starting to look at the risk.
So if you have a house that's worth $400,000 and the bank's only requiring $250,000, if you write and that's all the insured wants, you don't put replacement cost on there.
I still put replacement costs. I put a waiver of this is what we're recommending. In the situation of something that's happening, we just want you to understand that here's additional exposure that's not covered. At that point of just kind of disclosing what the risk is, what could happen.
Right.
Yeah, I don't want to scare people, but also don't. The first thing unfortunately that happens in a situation like that, they come back to you and say, well, why didn't you do that?